Okay, hi, good afternoon, everyone. Now we're jumping into the last leg of marine money for the next session on ship finance. I have 6 very experienced ship financiers who will share their views on their role in influencing best practices. I don't think they need a lot of introduction, and given the limited number of time, we will just jump straight in. So I'll briefly set the scene a little bit. The maritime industry is very well aware of the ESG challenges that it faces, and we really need to keep up with the regulatory sort of landscape. All stakeholders actually have a role to play in the ESG side of things. So everyone needs to take this seriously. We've all heard this over the last day and a half. And this also includes banks. And banks have a role to play to prepare the maritime sector to meet these challenges. So in this session, hopefully we will be able to discuss the million-dollar question on what are the expectations banks have today on their customers in the context of ESG. So I'll just go straight in with the first question on how important are ESG considerations when you're looking at a transaction. And maybe Christos can start this. I mean, ESG isn't really new to DNB, and you once said that shipping companies, if they want to remain relevant to investors and banks, then the sector really needs to start delivering results in environmental and climate efforts. So how important are ESG considerations to you when you're looking at a transaction?
I think it is extremely important, and I stand by the quote that I made a few years back. Really, if you look at the speed with which ESG has come to the forefront of decision-making for owners, for banks, for governments, we realize that this is something that is going to drive the industry going forward. For us, it's extremely important to see that our clients are embracing ESG. They are aware of the changes that are taking place. We are going through a major disruption event. I believe that if you're not aware of what is happening, if you're not preparing for the next phase of what is coming, you run a very big risk of becoming extinct. Now, the banks have a very major role to play here as well. We are setting standards, we are setting targets. We were one of the founders of the Poseidon Principles, starting to measure the carbon intensity in our books. And we are setting targets. And the key here is to be ambitious with the targets that we set, push everybody to do the right thing, but at the same time, we have to be realistic with what can be achieved and in what time frame so that we remain relevant.
Thank you. And I mean, for Pierre, I mean, I hear that SG is adopting a bank rating and scoring system for their customers as regards to ESG ratings. Do you want to share a bit more on how you rate your customers in that respect?
Yeah, thank you, Swan. So yeah, each bank have their own methodology, of course. Maybe just a bit of more color on how SocGen tried to implement what Christos just described. So it's a kind of a hybrid approach where we look at the corporate and the assets. So the ESG assessment is now fully part of the credit process. This has become a reality. And I'm sure for some other peers it's the same. So at the corporate level, we have a kind of ESG rating, which takes into account the several initiatives of the clients, mostly at the fleet level, but not only. So it's about commitment, targets, actual actions, and footprint. In addition to the corporate level, we actually have an analysis at the asset level, which is kind of required by the Poseidon Principles as well, whereby we use some third-party technical consultants to give us forecast on the vessels we want to finance. It's not an exact science. It's typically carbon efficiency KPIs, depending on the vessel specifications, distance traveled, etc. So yeah, that's the kind of 2 layers analysis we have. Sorry for going into details, but that shows you the level of analysis that senior lenders are actually going through now.
Yeah, thank you. And for BNP as well, Logan, I think this is also an important consideration. Maybe you can share a bit more on what BNP is doing on this front and what part of the ESG do you really look at when you're looking at it? Is the E or the S or the G?
Well, yes, BNP Paribas is also very much concerned with ESG. I think similar to Societe, we'll have a ESG questionnaire for onboarding new client and also for existing client. In fact, there is 3 areas that we are very much focused. This is assess that BNP Paribas ESG assessment that will identify companies with, if they have a ESG witness, that will help them to translate into credit, investment, reputation, and so that to helping our client. Another area is market integrity, that we played a very active role in creating a robust market for sustainability finance. And in fact, we have several working groups across the ICMA executive members committees. And also, we have helped advise on ICMA's KPI registry to create a transparency in target across the sustainable instruments involving in working group of LMA principle to develop the best market practice. The third one is the finance and variable target. BNP, we have dedicated at least 200 billion euros to supporting large corporate clients to translate to a low carbon economy by 2025. So the group has an intention to mobilize by 2025 more than 350 billion euros through loans and bond issue covering environmental and social topics for our clients.
Thank you for that. So a lot of focus on the E component. Carsten, KfW is also known as like a transformative bank. You focus a lot on the sustainable side of things as well. In the shipping space, I mean, do you see more focus on the E or the S or the G or all of it?
Yes, thank you. Well, I know time is short, but first of all, it's nice to be back, and thank you to all those who remembered me and gave me a very warm welcome to be back in ship finance. Thank you for that. With respect to ESG, I think there are 3 reasons why it is important for us, and depending on the regions and what we finance, the focus might be somewhat different. If we finance infrastructure in Africa, the S and the G is just as important as the E. If you work in a highly regulated environment, international transparent environment, like in shipping, the S maybe not so much be in the focus. If it is a well-governed industry, like in shipping, the G maybe not of that biggest relevance. But overall, as a public bank, we do have a high responsibility towards ESG, and I think that is for 3 reasons. First of all, we are fully committed to a 1.5-degree target for all our industries which we finance, and we have rather strict quantitative trajectories for each of the main industries which emit CO2. Secondly, we have learned when we did the first evaluations 15 years ago, there is a very significant positive correlation between positive ESG index and credit risk. So from a credit point of view, we learned a long time ago, it is beneficial to select for borrowers who are also on their own well-defined ESG path, because we learned the losses are less and the business is better. The third one is that it, of course, all this focus on decarbonization also inspires and motivates new economic growth. And all these changes give opportunity to the best of the best also in this industry. There are lots of opportunities. We like to support those in their transformation. And as we all know, any change brings opportunities, and this is why we welcome that and really focus on that strongly.
Yeah. So, I mean, you can hear from the panelists that they've all focused on ESG. And actually, I mean, the Poseidon Principles has actually been a very, very key reference and, for ESG as well. A few years ago in the Marine Money Conference, the Poseidon Principles were actually criticized for being unambitious. But actually, quite recently, earlier this month, it was said that the Poseidon Principles are going to up its game and increase its ambitions in the coming weeks in line with the IMO's new emissions reductions targets. So, Mark, as a founding, signatory to the Poseidon Principles, how do you think this change will impact the bank's lending appetite, perhaps lending behavior or its strategy?
Well, thanks very much, Sue-Ann, and thank you for hosting this, moderating this panel of banks. I think not just here on the panel, but I think in the audience, I feel like we're really preaching to the choir here because I think everybody knows that the net zero pathway, IMO 2030, 40, 50, under the revised guidelines, is no longer for something that we opt in. It's something that nobody can opt out anymore. And as one of the first signatories of the Poseidon Principle, and now a member of the Net Zero Banking Alliance, Agricole is obviously committed not just in shipping, but in all industries and sectors to the net zero pathway. In terms of how it would affect us in looking at our clients and discussing with them, I think earlier, I think some of my esteemed panel members mentioned that, it's ESG is something that's always been part of our credit analysis. I think the environmental part is obviously more easily benchmarked and verified and quantifiable, but the S and G is just as important. It's how you treat your employees, how you treat your crew. Does your board have a single voice that's that may or may not carry certain key man risks? These are things that we've always looked at. It's not new. So I think as some of us here already said earlier today, the fuel EU, the fuel ETS schemes. Regulators will continue to push all stakeholders to follow the pathway, and as banks, we should just be playing our part to do that.
Yeah, and for SocGen as well, you're also a signatory to the Poseidon Principles. How does this, new change the way you're going to be lending going forwards?
Yep. So Mark said it. The ambition will grow. The trajectory will steepen. And therefore, mathematically, we have to be more selective going forward. But, I would like to also reassure the community that, even though we have those stringent, guidelines, banks like us on this panel have been through cycles for decades, and it's not about, dropping anybody. It's basically about encouraging our clients, both at the corporate and the investment level, to do the right thing. I'm just repeating a bit what has been said, but yeah, that's kind of the reality.
Yeah, and Carsten, for you kind of take a little different approach. You say not much will change with this new change in Poseidon Principles?
Yeah, I think, did I say that somewhere or no? No, I think things will change. Well, the first things to note is that the significant financing banks have the declared will to work together on this important issue and have a joint voice and joint communication. So now the devil is in the detail. We had various approaches. And so far, we have decided to follow now the IMO path. One can wonder, why do you need Poseidon if IMO regulation is what we adopt, because that is what is the rule in any case. And I think that many of us feel we need to be more stringent, because if you want to arrive, and there are many banks who have declared that, if we want to arrive at a 1.5 degree target, there's only so much CO2 our assets, our borrowers can emit to keep within the limit of 1.5 degree. So, and the current regulation suggests carbon intensity, which means if you get more efficient, then you get better. But if the overall industry grows, they still might emit more than they should, and we would arrive at a higher CO2 emission and therefore miss the 1.5 degree target. We all know that from the cars got more and more fuel efficient, and the expectation was the emissions from individual cars decrease. But what did happen? In many countries, they bought gigantic SUVs with extreme efficiency per whatever, but the overall emissions increased. So just the carbon efficiency is not a sufficient criteria for us. We believe that, as studies suggest, there's a certain CO2 budget allocated to the shipping industry, and we all have to make sure that not more is emitted. Now, at the same time, the technology isn't there, the competitive regulation isn't there yet, so we want to support transformation. So our strategy is relatively simple. We have to follow a path which is at the maximum what is possible today for the next years to come, 8, 9, 10 years, at which point, once there are renewable e-fuels available, then we have to take a deep dive in order to reduce emissions so fast that we don't exceed the 1.5 degree target. But we have to be united today in our communication and say, whenever the year is, at that point, shipbuilders, operators, fuel suppliers, they have to deliver at that point of time, because we may not finance anything which goes off that curve. And with that, we give enough lead time for the industry to prepare for that. And I think this is still the discussions we are having also within Poseidon to finalize our approach. But the large majority of the very significant banks are entertaining these discussions on a very academic and quantitative and realistic basis virtually every week, and I'm quite positive that we come to a very satisfactory solution for the industry and the environment.
If I may, and Carsten, this was very, very interesting. I think the key question, that we have to answer as banks is, today, with the uncertainty we have, with the trajectories that we are setting, with all the discussions we are having on and off the record, if you have good credit business, do we turn it down because it does not meet the trajectories? I think that's an interesting dilemma that we have to face. For us, maybe I start by answering my question, but I would be very interested to hear about the others. For us, it's a very complicated matrix. If the ship owners can show that they understand what's going on, they're taking steps to get there, as part of their transition plans, they need to refinance some ships or add a couple of ships that do not meet the trajectory, then in all likelihood, we will be positive. But it's a very difficult decision to make, and it's something that did not feature in our decision matrix a couple of years back, but takes a lot of discussion in our matrix today. It's not a no, it's not an automatic yes either, even if it makes a lot of sense from a credit point of view and a return point of view. So that shows how the tools that my colleagues here have analyzed are actually starting to influence our behavior. And I think, Carsten, you will agree, probably it's the same with you guys as well, right?
And the solution is not to not finance today. I mean, there are some who are suggesting if we don't finance, we are not responsible for emissions and therefore we are clean. That's not our approach. Our responsibility is to accompany the industry on their path, whatever is possible today. But again, at some point in the future, we have to have a target so that we jointly all together throughout the production chain know what we want to arrive at. But the clear purpose today is, I mean, under our brand is transition finance. We accompany those who are first movers and second followers. That's I would say so. Those who want to continue to do business as usual will get less financing from us in the future. That's also for sure.
Yeah. So it's quite clear that, you know, banks cannot just lend money. It's not just about lending the money. So when considering its investment, ESG considerations are clearly very top of everyone's minds. So for banks with, you know, very big significant exposure to shipping, when considering investment strategies, will it be a fair statement, and maybe Jolene can take this one, will it be a fair statement, you know, that you will prefer financing a more energy efficient ship, and you will prefer to finance a company that has got a very clear formulated ESG strategy, rather than, you know, than none of that?
Yeah, I think it went to sleep, sorry. No, thanks. That's a very relevant question, right? Because I think these days, people think about ESG, and then we try to obviously divorce ESG considerations with potentially credit, and that's us just trying to pull a fast one when we go to credit to say, oh, you know, it doesn't meet the trajectory, but maybe we could do this because in line with the entire portfolio, it still fits the trajectory. But I think the other level discussion that we always have is the fact that not being on the right path, if I may call it that, could result in some form of transition risk. Are we at risk of being stuck with an asset in X number of years' time, say beyond 2030, for example? I mean, now it's 23. So if you do a 10-year deal, for example, then it's 2033. Okay, what's going to happen to that asset? We look at the residual value analysis. Is it really worth that amount that we think it could be worth at that point in time? So we have interesting discussions on issues like that, but I would say that for the journey currently, we are still largely thinking on along the lines of, is this a company who has their hearts in the right place? What are their attitudes towards transition, towards ESG? Are they serious about saying what they want to do? Again, we are a relatively new lender compared to the rest of my panelists here. So we do have the benefit of picking and choosing and starting slower because our portfolio is really small. We don't have to think about potentially difficult discussions like, hey, you know, I don't feel that you've done very well on this and that. And maybe we can start thinking of taking a break, for example. So we feel that we have more latitude on that front to have potentially more difficult discussions. Having said that, we are also trying to grow our books, on the shipping books, in line with Singapore and MPA's maritime finance aspirations, but at the same time trying to further its growth on the maritime decarbonization front. I mean, the fact that marine money is in Singapore, and everybody knows how active Singapore is in trying to promote Singapore as an international maritime center. We are doing whatever we can to improve the availability of ship finance to shipping companies which have a real presence in Singapore. Many of these conversations are with new companies that, frankly speaking, I had never spoken to in my previous life when I was working with Christos. So it's very interesting discussions we have in terms of what do you do and who are you really. And okay, you speak to MPA a lot. What are your aspirations? What are you trying to do, etc. And it takes a long time, and fair to say it's very obvious it's a very thorough and rigorous process.
Okay, thank you.
Sorry. Yeah, maybe so for BNP, and I would like to say that ESG definitely, if the client, they have a ESG report and they are target and commit for certain ESG criteria, that definitely is helping the credit And also if the vessel we are going to finance, there are fuel efficiency, maybe dual fuel engine, LNG or ammonia, methanol, of course, that will help. But that is only one factor, because we are still banned, so we also have to look at the fundamental credit. Yeah, but for the asset we finance, for the company commitment in ESG, definitely will help for our overall assessment. Yeah, and I would like to come back about the previous question, Poseidon principle, because it seems someone may say that we don't need Poseidon principle. But I think Poseidon principle is a guideline that will help our client, they know where they are. So that is a guideline helping them. So and also that if our client can follow the trajectories of Poseidon principle, that we know where they are. And also if they cannot follow that, if they are positive, then we know, then we can help them. This is the way to look at how to develop the helping our clients. Because all we know, Poseidon principle, the data we collect is 1 year ago. This year, we are collecting the data is last year's. So we were based on historical data to helping our client how to move forward. And this also gives the moral or reputational pressure for us and also for the client. So that is moving, so that we are moving together to help the society. Yeah.
Yeah, maybe Mark can take this forward as well, because you were, when we discussed, you said you were moving forward. We don't dictate the rules. The client has to come and tell us what it is and basically craft it out together. Do you want to expand a bit more on how this is done within your organization, as well as maybe touch on the point of SMEs as well, because shipping is pretty much capital intensive, and from what I'm hearing, huge credit process, stringent rules, selective. How do the SMEs cope in this market?
Well, when you say SMEs, I have to say, shipping is a very highly fragmented market, and our clientele runs from SMEs, family-owned businesses, all the way up to the big public-listed companies. And I don't think when you draw that spectrum of size, it's not necessarily correlates to credit risk, right? We don't consider SMEs as a more inferior risk class, right? And in fact, we never presume to know more than our clients about shipping. And we find in case a lot of SMEs, they have a lot of flexibility, they've done a lot of study, and they're the ones coming to tell us, I hope, guys, this is what we're worried about, and this is not for PR, this is really what's happening in the market, what's happening on the technology front, and these are the things that keeps us awake at night. And we find that to be actually the most valuable discussions, because shipping is one market globally, and whatever applies to one client on this front applies to everyone else. So going back to your original question, what do we look for in our clients? I think it's this kind of awareness and willingness to abide by the net zero pathways, and the ability to communicate with us, to come at us with questions. We're not here to invent the rules. I think I remember 20 years ago going to clients and explaining what KYCs were, right? Or going 25 years ago, going to clients telling them that we need to shift to double hull tankers. And really it's a dialogue, and they need to come to us and ask the right questions for us to think and feedback to our management, to our regulators, so that we can move forward. Just as Carsten said, we're not here to stop shipping, because if we don't do it, who will? And shipping is lifeblood of world trade. Despite, let's say 3% of, we always hear the 3% carbon emissions. That's how much. That's Germany. So that's it's not something that we can stop doing, but it's something that we can do well in support of our clients on the long term, especially those who also recognize it's a long-term problem with a long-term solution that requires dialogue.
Carsten, do you want to add on to this? Because, in today's world, we're no longer just looking at the asset, the collateral, the credit process, the company itself, ESG. What are you looking for in a customer?
What do I look for into a customer? I had wonderful lunches here with customers. That's always lovely to start with. But beyond that, we do finance the whole spectrum, right? From large corporates listed all the way to smaller, the SMEs ones. So we are not per se excluding anyone, but I think most value we can give probably to those who are open for new structures, just to give the cheapest money to a large, well-rated corporate is maybe not our biggest strength. I think wind park vessels, which have short employment, FSRUs, which are more assets from the energy space, which sit somewhere 15, 20 years. Things like that, where we question, is it appropriate to apply the standard ship financing structures, or aren't there smarter ways to do it? And of course, we can draw from all the other structures we see in the energy space, in the infrastructure space. There are several companies, whether on the container or gas side, who are trying to increase their value chain door to door. Don't we need new financing approaches and structures? I think we have a lot to offer there, which might be beneficial to the customers, to bring it off balance, to make it cheaper, make it more long-term. And this is what we appreciate in customers, if they are open to discuss also new structures which might be to the benefit of themselves, their customer, and the overall service of the transaction.
Yeah, and just let me touching on structures. The current sort of ship finance structures we typically see on the SLL front tend to focus a lot on the E component. Do you think, this can be open to any of you, do you think there might be room to focus a little bit on the KPIs on the S and the G factors rather than the E environmental KPI?
Yeah, of course. To be honest, in the SLLs that I've seen, very little of S yet is being done beyond some diversity KPIs, and I think we need to improve in that overall. For example, I've not seen KPIs related to crew. I think that's something to indeed further explore. We can do better.
Okay, we're running out of time. So one last question, and for all of my panelists, if you had like some magic superpower, what is the one thing that you would do so that you can accelerate this change in the shipping industry? Just one word or one sentence. Mark.
Nuclear fusion. That would be my magic superpower.
Jolene.
Mindsets. I think if everybody decides today that, including non-shipping people, that it's absolutely necessary to do this and pay for the extra cost, that we all, as a global population, should be involved, responsible for, I think the world will move at a much faster pace.
I don't think we need any superpowers. I think the momentum that we have in the industry at the moment is unprecedented. The amount of money, the amount of research that is taking place when it comes to new technologies, new fuels, is something that we've never seen before. The willingness, the desire is there. We see certainly the bigger clients, and I will disagree with Mark on size. I think, the credit risk in new technologies and new types of vessels for a small owner that has one or two ships is much higher than somebody who has a big diversified fleet, but that's besides the point. I think there is so much drive, there is so much momentum. We will get there, and we will get there sooner than people think. So no powers, no magic powers for me.
Yeah, I would say targeted actions. It's good to have these high-level discussions here, but I believe in deals now, and doing things like, supporting methanol dual fuel container ships, for somebody who has already secured a little bit of biomethanol as a supply, let's do it now. This is happening. The MPA discussed about the electrification of the port here in Singapore. There's going to be, I think, big discussions as how to finance this. So yeah, it's bit by bit. It's not revolutionary, but it's happening now. So let's do it. Yeah.
Well, I think I like Marvel, so I need a superpower. And there may be another Einstein that just like that, we can have an invention that using water as a fuel, economic water to be energy sources. Then we don't need to think about all that because water is everywhere, the whole ocean. So, but a lot of companies may not like that, particularly oil majors. Thank you.
I think accelerating a unified approach on technology, I think that would be wonderful. We have to allow diversity, but from all the discussions I hear from fuel producers, distributors, those who burn the fuel in whatever space of mobility, if we could unite faster on the technology, that would take a lot of uncertainty out of the market and would bring us closer to and faster to the goal we all want to achieve.
Great, thank you. Thank you, everyone.